Hey guys, Scott Phillips from scottphillipstrading.com. We're just a couple of hours away from the New York session open, and I thought I'd give you an update on the setup that I covered in the emini a couple of days ago. And I wanted to show you some interesting stuff about the fractal nature of price action. And yeah, let's get to it. So this is the emini September contract, the S&P 500 futures. So what we have here, we have what looks like, this whole section here looks like a big choppy mess. And most people will look at a choppy mess kind of price action, put a box around it and go wait for a breakout. And that's one perfectly valid way of trading it, but there's a lot of granular detail that you miss when you do that. So what I want us to look at closely here is, in particular, at the end of a move, we talked last week about these particular candles, these spinning top outside period type candles. So what this is there's a tremendous amount of longs who are still short and a tremendous amount of shorts who want to start top picking the further a move goes. So what this is both longs and the shorts getting screwed out of their positions at the same time. Now, anytime that we see a big outside period like this at the end of an extended move, we start to become suspicious that the move is close, but maybe not quite at an end. It's not a reason to go short, but it's a reason to start being very cautious with longs. Okay, so after that we have another attempt to break out, which fails. At this point here, we can reasonably say that the uptrend is falling, and we're at least going to pull back and create some kind of trading range for a while, and before we move on. Now, here this looked like a bad fail by the bulls, and it should have broken away, but we rallied. The bulls were in control. The bulls should have put the bears to the sword right here, but they didn't. It rallied. At this point, I believe that we can reasonably say that the bulls were a lot weaker than they looked. Now, the next couple of days, we have this choppy kind of price action here. Now, it's quite extremely common to expect resolution and have that resolution happen 3, 4, 5 days after. Then you look at the chart and expect it to happen, which is what's happening here. So here, if we zoom down and we look at these individual bars, this one, a failed attempt to drive the market up. Here, a failed attempt to drive the market up that fails even harder, even though it tries even harder. Here we have a weak attempt to drive the market up. And here we have very two-sided price action. So what we have here is the market going up, but closing well off the highs. It's trying to go down, not going down. So what this bar here is a market. This nondescript, weird-looking little bar is also an outside period. So an outside period is a bar with a higher high and a lower low than the previous bar. A bar with a higher high and a lower low. Now, this is a clue of both longs and shorts being fatigued out of their position. So what it is it's a clue that this choppiness is close to the end. Now, we can see here that the bears have started to wrest control, heading into the open. And yeah, let's take a look at the 60-minute chart. I want to show you exactly what that looks like. So if we zoom back out a little bit, we can see it really nicely. So you can see the market fell very hard here. So excuse my virtual machine, it's running slow today. And the character of the rally up here is very choppy. So what we see is we see many overlapping bars, many sequences of one up, one down, one up, one down, one up, one down. We see a lot of overlap. And here we see a fast drop and an attempt to go up again, which fails. At this point here, sorry. At this point here, we can say that the odds are really changing in favour of the bears. And we can see here that bears have tried to wrest control, but the bears' real test comes trying to break through down here. And it looks like the bears are going to attempt to do that as we head into the open. So let's see how it goes. And I just want to show you at I want to show you what I do before I go to bed every day. So my my daily workflow is I get up in the morning, I check the markets at the same time every day. I place the setups that I need to, the orders that I need to. I check my automated systems, and I update my spreadsheets, and then that's it. The day's done. That takes, you know, between 20 minutes and an hour, depending on how it is. And then I switch the screen off for the rest of the day because it's really important not to screen watch. It just induces this incredible mental fatigue. You start to believe the wrong things about markets. You start to cheer your trades on like a horse at the track. And to your subconscious, you've been making decisions all day. So your subconscious can't really tell that you're not getting in and out of the trade every second. It just thinks you're deciding to stay in the trade every second, and it just induces this incredible emotional fatigue. So what I do is I don't look at the charts all day, and just before I go to bed, I check all the stops. So I'm going to do that with you now. I'm going to go through my trades one at a time. We're looking for the ones on this U138123 account, which are the ones we're running this system on. So at the top, we're looking for GC0817. Okay, so I'm short from the low of this candle here, which my automated systems have marked in a color to make it easy for me. The trade has gone down. Stop, you can see, is at my entry point. I only have 2 contracts left because I've banked partial profits. And I'm short here with a stop at break even, and the stop should be at break even. And I take some more profit off the table down there. That one looks good to me. Okay, so the next one that I'll check is 6J0917, which is the second one down. We're short only 1 contract at this stage. Okay, so I'm short from the low of this shooting star here. And look at that. I'm missing a stop. So it's good that I'm doing this now so that I save myself a potential mistake. So to me, the worst possible thing that can happen in my trading isn't 10 losing trades in a row. It's me making a mistake, and a mistake is not having a stop on. Okay. Let me just add the stop. It's kind of slow because I'm running it through this virtual machine on a mobile phone connection now. Just make sure the stop is good to cancel. And I'll place my stop there, buy stop.
Order pending.
Okay. Next trade, PA0917. So this is September Palladian, and we can see we are short, stop above here, target here. This is just a scalp trade because it's counter trend, and that looks okay. Okay, those are all not this account. Cotton is okay. The emini. Right, I have two different trades here. One with a stop above here and one with a stop here. Both of those are correct. All right, so that's my workflow done for the day. It took about, I don't know, a couple of minutes, and it's one thing I do before I go to bed every night. I want to make sure that all my stops are resting in place, and then I want to switch them off so that I never check it again. Okay, guys, thanks very much.